Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend Podcast. Today is Friday, May 24th, 2024. I'm David Zarling. Ian McMillan is on a well-deserved vacation. I'm here with the ever professional Kevin Ferrari. How are you, Kevin?
I don't think I've ever been necessarily that professional in my life, other than when I had to be for the interview, and then I pretty much threw that out the window.
Oh, you've been great, man. It's always good to have you on.
Other than that, just a little sunburn. That's about it.
I was
99% sure that's what you're going to use, but then I was waiting for it.
Yeah, I could have gone various ways. Gingers are sensitive to the topic.
That is true. It's a very touchy subject.
So didn't know if I could go there, but it's a sign of seasonality in Wisconsin. I would think that if we're talking about sunburns,
So
the sun's out and you're outside.
Yep, for sure.
That's good. You putting salve on that thing or what you got rocking? I heard you're
I
supposed to put vinegar on it. Got some house. I don't know about that one. I felt like I didn't know what to say when I heard that one.
I think it was a little late in the sunburn cycle to try that one from what it sounds like, where it's most effective. But,
Okay.
I'm curious enough if I remember it next time to maybe try it. But yeah, I've never had it this bad. There's a lot of chemicals and ointments and things that have been going on it. So,
Well, I love and respect Dominique. I just had never heard it before, and I'm a ginge.
Yeah.
And, we tried everything.
you learned after a while, I would think, right, as a group of people, if you will.
People.
It's just not worth the effort anymore. It just can't. You're not going to fix it.
Yeah, I'm one of the fortunate ones where I can actually tan over time. I can't jump into it. Like I can't just show up at the beach and let it fly for 2 hours, but I can tan. But
You can
at
get
the
there.
same time, I can get there. It's just a longer trip.
Baby steps. Right.
Baby steps. You can't get it all at once. Can't boil the ocean. It's great to have you on. Plenty to cover. We had Nvidia earnings yesterday.
Really, I didn't hear about that.
No. Now what I would say is interesting about that is you talk to an industry related individual. They absolutely heard about Nvidia earnings. Maybe about 30% of retail. For example, my wife is not asking me about Nvidia yet. And when I asked her the other day, hey, you ever heard of Nvidia? And she's only because you told me. My mom hasn't texted me about Nvidia yet.
They don't really have people at the gas pump next to you on the morning and be like, hey, did you hear about them earnings?
Yeah. Yeah. So it's this interesting, potentially early phase. We have no idea, but I would say it's not a household name. Like we don't talk about Nvidia the same way we talk about Amazon or Apple, right? If you asked your parents or grandparents about Apple or Amazon, they absolutely know what those things are. I don't know that we've reached that category for the average retail investor in the United States.
Or I don't think they really have that product that's in your face necessarily. If you're people that are probably more so into like gaming and things like that, where like the graphics cards are more of a big deal, where you get into the Chevy versus Ford thing. But in that side of the industry, Amazon showing up to your house, well, at least my house, for crying out loud, it seems every day. We don't got to go there. But yeah, I just think they fly under the radar a little bit.
And there was a period, and I don't even know if I like bringing up this circumstance because I'm not trying to make the comparison time frame wise. Like Cisco was a networking name. So they didn't provide a good, they didn't provide some type of commodity like a phone. They didn't provide a good or goods like Amazon. This was a networking company back in 95, 2000 that did get to grandma's level of attention, where I remember much older generation at that time saying, hey, can you buy me some more of my Cisco? Giving a possessive the discussion that this is my Cisco. And so it's an interesting dynamic because I don't think we've reached that level yet, but like most people listening to this are gonna be like, yeah, I know what Nvidia is. Come on. Why are you guys spending so much time on this? I just think it's important to point out that while yes, industry specific wise, people are aware, but it hasn't reached Nvidia has not come up as a topic in client meetings. It is not, hey, do you guys want Nvidia or what's your Whereas, yeah, I own Apple, I have Amazon, and like people talk about those things. So it'll be interesting what this Thanksgiving or Christmas brings if Nvidia continues to move higher, which it did get a positive earnings response. That's one of our things that we're looking at is not the earnings themselves. I actually don't know what their earnings were. I don't know what they did. I don't know. All I know is that the price reaction, the opinion of the market, which we view as being the smartest of all market participants, that the weighing machine, the average trading machine is smarter than any one individual, had a positive response. So price responded positively, I believe up 10% after earnings. Now, whether that sticks or not is to be determined. It's always that step one and then the following days. Like one day it's got to be ongoing.
Yeah, especially with these gaps, right? I mean, we see those come through after earnings, fill those sometimes, or test the half gap and then off she goes.
Yeah, we had a gap in Nvidia around what we'll call it the 955 level up into 1020, that there's a price gap and it's one of those things where you want to continue to see follow through on that. We don't know if we get it, but it is the largest component of semiconductors. And maybe I can use that as a segue into another type of analysis. When we've talked about semiconductors here in the past, if we're talking 100, 200 years ago, we're talking about a agrarian society, right? Very farm-based. And then you go into the Industrial Revolution. If we are now in the tech age, semiconductors would be a significant thing to study. If your largest component in semiconductors, Nvidia, it's worth paying attention to Nvidia, but it's not like agrarian has gone away. We still eat food. Like we still need farmers. Farmers are amazing. They put food on the table. They keep getting better and better at yield and what they're harvesting and able to produce. And same with industrial production too.
And really the technology advancements really have just fueled both of those areas, right? And they're getting better because technology is getting so much better. Right? You're getting data from things now to where they're doing like these variable applications of like fertilizers and variable seeding, like all kinds of crazy things. Like it was just up Turkey out in the central part of the state. Was that like 2 weeks ago or something like that? Like they're like watering applicators and things are like all on satellite feeds so they can move themselves to different parts of the field. So just the way things work now are just crazy.
Yeah. Isn't that wild? Could you imagine being transported from 100 years ago to today and what farmers are able to do?
Witchcraft.
Yeah. Like it would be straight up. They know the moisture content. They know, I think you brought up the middle part of the state. I think that's a sensitive area where they have to bring in irrigation and they're watering consistently. Yeah, a lot of sand. The fact that they know, or they have the ability to look, or that you can send a drone over a field and understand, or what. I don't want to sit here and pretend I know. I think farmers are some of the most intelligent people on the planet, the things they have to deal with. So I don't want to pretend I know what they do. You're right that technology is just fuel on that fire to do things better. And at the same time, it's not like industrial production's gone away. We still have raw produced. There are still metals that go in your phone. Yes, your phone is a tech device, but now it's a commodity. Apps that are happening inside there, but semiconductors are indicative of that, like tracking what semiconductors are doing. And that's a long-winded way for me to bring us to this concept of Dow theory. And maybe if I can set the table here, Dow, way back in the day, he's actually like late 1800s, early 1900s. He's the one that
pre-YouTube.
Yeah, this pre-YouTube.
Yeah, like way back.
It might even been pre-Tube. He developed the industrial average and the transportation average. So the Dow Jones, the same Dow Jones that we're talking about, whether it's on TV or wherever you collect it, is actually named after someone that's named after Charles Dow. We call him lovingly Chuck Dow. His main premise is I'm going to take the 30 highest priced industrial stocks. So this is not cap weighted. It's a price weighted index. I'm just going to tally up the price of the top 30. And then I'm going to compare that ongoing to the same concept using transportation stocks. And his theory was basically, I should be able to see industrial production and compare it to the transportation of goods, right? I'm producing and then I'm transporting it. And if there's some type of divergence there, that would be some type of warning sign to the market. So it's a table there. What are we seeing that type of analysis between industrials and transportation?
Essentially, the industrial average broke out and moved to new highs basically December of last year, whereas the transportation average really just continued moving sideways and just consolidated. They really didn't confirm each other.
A non-confirmation in another time period, when these divergences happen, is it fair to say that, let me step back. You're saying industrials have moved higher, transportations have not.
No.
In its most simplest form. And that's been going on for, you can call it 6 months.
Yeah, I would say that's safe.
Yeah. And these divergences like this have been a predecessor to market corrections when confirmed. The hard part in the analysis is divergences can go on sometimes for much more than 6 months.
Yeah. And really that's true for a lot of different divergences too, right? Like even RSI divergences too can have that nature where they can be pretty extended. You really don't know how long they're going to take to play out if they do at all.
It's one of those things, a simple way to put it is we would be looking for confirmation from the transportation average, which has been a hot mess since May of 2021. But if the transportation average can get above the 17,000 level, that would then confirm the move out of the Dow Jones Industrial Average Index, which that horizontal level in December of 23. And we touched 40,000, a nice round number, and we've since reversed a little bit, namely yesterday. But so we have a Dow Theory divergence. At the same time, if we were to modernize that analysis and say, if we are a more tech-based economy currently, this can always change. And again, this isn't to say we're not an industrial economy. It's just that tech has become the largest weighting in the S&P 500. We look at tech and compare it to the S&P, compared to like semiconductors. Semiconductors being, I love that they call them semiconductors because it's like a digital train, like transportation. Mm-hmm. Semiconductors are transporting digital goods and tech is that digital good. That it might make sense to compare semiconductors to technology. What are we seeing in that environment? If we're just looking at, and this is a little bit harder analysis because a lot of the averages or ETFs that you look like have semiconductors lumped in them.
Yeah, they're pretty commingled for the most part.
So it's hard to get that differentiation. And I know before we hopped on here, we just talked about maybe just comparing software versus semiconductors. It's interesting to notice that.
Yeah, you got like the same look, really.
It's just inverse where the product, the technological good is the one that's diverging from the part that's transporting it. So you have a divergence there. Does that come to fruition? We have no idea. If you look at something like IG, you'd want to see that clear $90, confirm the move out of semiconductors, which have been alive and well and have been a leader since the market bottom in late 2022. And really the poster children for this move off the bottom in late 22, and even more so since it started accelerating in October of 23 as Eli Lilly and Nvidia are really two of the main leaders out of that regime. And they continue to confirm new highs. And so we continue to see health, like things being healthy in this market environment, unless you have pushback on that.
No, I don't think so.
And in interesting development, not only to the earnings, was Nvidia announcing a stock split, right? So they're doing a 10 for 1. So for every share that you own, you get 9 additional shares, but at the same time, the price is divided by 10. So it's not like you gain some type of statistical advantage. You just get more shares at a lesser price to equal what you have. So if you've got dollars in one share, you're still going to have $1,000, but in 10 shares. And that's coming up in June. When we look at stock splits, are these a good thing? Are they a bad thing? You have any thoughts on stock splits, Kevin?
Actually, I was just thinking about this randomly this morning. Not necessarily that, but what do you think the company's thoughts are necessarily on doing these splits? Like why they think it's a good thing?
My guess is they're getting some type of advice on, right? Because running a company, cash is still king, right? You still want to have liquidity. And if you feel like you can develop a situation of accessing cash, right? Because if you have cash, you can grow your business, right? You can hire talent, you can get better technology, you can have better resources to carry out your service to your customer. And there's a couple ways you go and do that. You take your existing revenue, but then can you multiply your existing profits? How do you go do that? Maybe you go to the credit market and you issue bonds. The reason why stock markets even exist is it was another way to raise cash to carry out and execute the mission of the business. Is you went to the stock market, you raised capital, the capital markets. So I'm sure there was analysis done on if we do this stock split, would it actually increase participation in the stock, therefore providing more capital to the company? That's a theory, right? Because a retail investor being able to buy one share at 100 is easier than one share at 1,000. Now, I think another thing that's popped in my head that I think I don't know.
I'm going to say, you're walking right in the doorway, man. Keep going.
I was going to say fractional shares, right?
Shares. Yeah, exactly. Depending on where you got your money now, is this even really a thing that matters anymore? Because
yeah, I love this.
Fidelity, you can get fractional shares. What if it's like the S&P 500? And there might even be something else. I don't know, but like Interactive Brokers, you can get fractional shares. Robinhood, I think does fractional shares. Does this really even matter anymore?
Yeah, no, I think that's I would say we are definitely in the sunset phase of needing to be concerned with whole shares because lots of firms are providing fractional shares. Now, I will admit that I don't know if the fractional share is happening at the ground floor. Like I'm not sitting here saying that fractional share is being recorded at the DTC per individual. Is the firm where the security is being held creating a synthetic fractional share, right? Like they hold one, they sell a quarter to each individual, just recorded. It's a bookkeeping entry. And so do fractional shares actually exist at the ground level? Maybe that we could sit around a campfire and figure this out.
Because then you'd think just as your participation rate in fractional shares grows, you just think then that institution also has to participate at the same level for national shares, right? Then probably letting them on.
Right. The point is exactly valid. If the boardroom was saying, hey, this will get more involvement in the stock, that argument continues to dwindle based on the fractional share availability.
Right.
Now, I don't know what other considerations there could be. There's always you don't know what you don't know. So I have no idea a stock split helps with any of their other debt obligations or any of their I don't pretend to know those things, but I do know that to your point, it's likely that they start to go away because of the fractional share availability. And it's not, go ahead.
Well, because to your point, right, like, is this a good thing? You think 10, 15 years ago, before this was even a consideration, right? I guess the general thought would be lower price, more retail investors can participate. You should see like volume increase in stock and you would assume appreciation. And that would be the general thought behind it.
Say you own one share, it allows yourself to divest without selling the whole thing. Now, when we study historical stock splits, while they might be great for access, I would say the forward returns are mixed when companies start doing this. Yeah. Google and Amazon and Shopify did this in 2022. Google was February 22, Amazon was June of 22, Shopify was June of 22. And it's a mixed bag. Like Google stock decreased in value after that. Amazon stock decreased in value. Shopify, that happened to happen during a bottom. Yeah. Apple did it in August of 2020. And it really it's not like Apple has gone gangbusters since August of 2020. And so most investors, you should if the motivation is to get more retail involved, isn't that just handing off the bag? And I think that's where people might need to get a little skeptical about this, is that if they're truly doing this to allow more access to retail, isn't it for institutions to hand off to retail? So it's another thought process. It doesn't necessarily mean clear skies. And I'm impressed with how quickly the stock split is happening. I believe it's happening in June of 2024. Yeah.
Seems like a quick turnaround. And I haven't really paid that much attention to the others to see when they're first actually announced.
Right. When they're announced and when they're...
It just seems quick, but maybe not.
Yeah. But it is, when you step back and look at the big picture environment, that Nvidia has been a leader since the low, since the bottom in late 22, since the acceleration in late 23, that they're now announcing a split, and that splits have a mixed result when they're implemented. As far as what I mean by that mixed result is not about the company, it's about the stock performance. It's not always like good, great, and fine. In fact, we tend to see 6 months returns that do not match S&P 500. If that market leader is going away, we want to pay attention to that. And I'll give kudos to Nvidia for reading that for May, June, and July is really strong. You look back 5 years, 10 years, 15, 20, it's only gotten stronger the closer you go in time. But semiconductors seasonality is really strong over the summer. They would not issue more shares, but split into that seasonality. Mm-hmm. Pretty good advice from a company perspective. So I did not anticipate that we were going to run the bases all the way around on Nvidia 20 minutes, but it was important to tie in Dow Theory, that comparison of industrials versus transports in the modern era. If Chuck Dow were alive, he'd probably point to, hey, we produce technological things, and a lot of it is software, and that's transported over conductors. So compare the two, we have a divergence there. And so while we have a bull market on our hands, we're not sitting here there saying it's risk off, but there are divergences underneath the surface worth paying attention to. Last week, when Ian and I chatted, we had 100% of sectors above a 50-day. We had 100% of sectors above a 200-day moving average. We had 100% of sectors with a 50-day above a 200. Last two things I mentioned are still applicable, but there's a fair amount of sectors this week that pulled back into their 50-day moving average or even below. Thursday was an interesting day because that was Nvidia earnings day. Market gapped up, but then sold off the entire day and created a bearish engulfing candle yesterday.
Really?
Do you feel comfortable describing what that is to our listeners?
Yeah. So I suppose the easiest way to picture it, we have, well, especially this week, we had multiple, basically the whole beginning of the week was essentially sideways, right? So you have multiple kind of sideways candles, and then one, full candle with a wider range that fully eclipses those other ones, but bearish engulfing, right? To the downside, obviously red candle fully eclipses either the previous day or, in this case, essentially the whole previous week's worth of daily candles, which, can possibly signal, it's a reversal candle, right? Or at least potentially. I guess you still needed something, right? Confirmation of that to the downside, right, which at least so far, I'm probably checking on this morning, we haven't really gotten, but.
Right. And so what Kevin is describing is, if you want to think of, if I can use the weather analogy, you have bearish engulfing. So price overlaps the previous day or days of information in a negative fashion. That is dark clouds.
Mm-hmm.
Confirmation would be actually feeling the raindrops. And today would be that day that we're looking at for that type of information we're not currently seeing. So there's times where you can see cloud cover and it's just is what it is. It's cloud cover and it doesn't turn into precipitation or some type of storm. It doesn't have to be a storm. It have to be another correction like the one we saw in April, which was perfectly normal. We've reclaimed those highs. The largest 50 stocks, the large 100 stocks in the US have reclaimed those highs. We've seen strength. Those pieces of environmental information have not gone away, but it was interesting to see the market have basically an 80% downside day. So 80% of the market having downside volume on a day where Nvidia is up 10%. We're using type of event to sell into, or it's just one of the biggest rotations we've ever seen where people are willing to sell out of everything else and buy into semiconductors. To be determined. We don't know the answer to that.
Not yet.
But we will. That's why we use technical analysis.
No, it's a great thing, right?
We don't have to marry our opinions, right? We just get to marry our wives and enjoy that and raise our children. And with that, time frame matters, right? My daughter's graduating this weekend, and the old adage that the days are long, but the years are short is a time frame question. Technicians are always talking about time frame, or when we say we're in a downtrend, what time frame are you talking about? Or if we're not, are you talking about? Same thing with life, with our kids. You're early in the time frame, Kevin. Sometimes taking care of a young child. The day might feel long, but before you know it, they're wearing a graduation gown and walking across the stage and on to a new chapter. And that's life. And it's a beautiful thing. And so the days are long and the years are short. And I would say the same applies to markets. Time frame matters. We can't just get caught on Thursday's move. Thursday's move, meaning this bearish engulfing, doesn't mean the next 6 months is negative. The only way we would know that is if we are clearing lows. So like the April lows, for example, those would be a good start to understanding if this is really a storm that's upon us, where these divergences that we talked about previously were the harbingers, like the canaries in the coal mine. Below April lows, that would be the start of, okay, we might have a bigger downtrend on our hands, and we're not there yet.
Right.
We were going to keep this short and sweet. We didn't necessarily get time to talk internationally. There was pullback. We haven't broken any levels necessarily in that perspective. We saw dollar strength this week. The Euro USD continues to be an interesting consolidation that resolves to the upside, that you might see a return to value. The Euro tends to trend in that direction, that you see value in small. And I would say the relationship of small caps versus S&P is at a really important level that goes back to October, November of 23, where we saw all the breadth thrusts, the massive expansion. That's where we're at with small caps versus S&P, meaning is there an advantage to owning small caps right against that level where you would say there needs to be, the market's still making a decision on that, on where the advantage could be. And for example, small caps have not cleared their April highs or their late March highs. Large caps have. And so does that mean a large cap summer? Are we breaking out the really big hats and it's led by semiconductors? I have no idea, but it's interesting to see where small caps are versus large caps. International continues to be strong. We could go sector by sector, but we're bumping up against the end of our time. And I want to make sure that I highlight the supporter of our podcast, which is the Adaptive Select ETF listed on the NYSE under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Through proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. I have no idea if people use their phones this way anymore, but they can call in. Investing involves risk, including possible loss of principal. Distributed by Quasar Distributors, LLC. So near the end of our podcast, anything else, Kevin? I really appreciate you doing this with me, but I want to open it up if you have anything else you want to cover.
Holiday week next week.
Yes.
And do you actually know there's 2 holidays next week?
Okay. Talk to me. I know Memorial Day.
Right. Obviously the biggest one, and just early so. But what's the next day after that? Also a holiday for me anyway.
For you? Are you off? Are you off on Tuesday?
No. I mean, it should be for everybody. That
is this
markets?
It's not Kick a Ginger Day, is it?
I wouldn't give you a heads up if it was. I'm kind of ruined.
Okay, what do we got? What is it?
T+1 day, man.
Oh, yes.
That should be a national holiday.
We do have, okay, we got to give that a couple minutes because can you describe, what does that say? What does that mean when you say T+1? What do you mean by that?
Yeah, it's good because I think that the last time I was on here too, I was getting pretty pumped about that. Trade summer, obviously not an instantaneous process, even though it feels like it is. Believe it or not, shares and money changing hands actually takes a few days to sort out in the back alleys of the markets. Currently, like your stocks, ETFs, non-mutual fund securities for the most part, or T+2. So just for easy math, if you will, on a non-holiday Monday, right? If you would buy or sell something, it takes until that Wednesday to settle. Now, kind of mutual funds and equity securities are going to be on the same playing field where they'll actually settle the next day. So that makes, obviously you get, if you're selling funds, you get access to those funds earlier. So I guess for some reason, if you have to wait till settlement to buy something else, that can happen quicker. If you're trying to take the money in form of a distribution, that can happen quicker. Like for us, depending on how models look, it makes that Reg T settlement map, if we're fully invested, a little less hectic, which is a win for everybody.
Yeah. It's more
Custodians
efficient.
really don't have to police that as much necessarily. It shouldn't be as much of an issue.
I think that's great. The analogy I would make is imagine going to the grocery store, pulling up to the counter and giving them your money and having to wait 2 days until you could take the groceries home.
Up your groceries. Yeah.
Yeah. And now you get it to do it in a day, which sound ridiculous in a grocery terms, but this, all we know is we're stepping forward towards efficiency, and we ask our European brethren to get their act together. First and foremost, get your exchanges to communicate, and then get to T1. Let's provide people who access markets even more efficiency than before. So yes, I'm with you. Not as important as Memorial Day.
Not even close.
But yeah, not even close, but it's awesome. But it's also, they're interlinked. And I'll make this connection that those who died so that we might live free, and the free men go and develop great things on behalf of their citizens. T+1 is one of those things.
Yeah.
And America's great because of that, because it is a free place, because of what other people were able to sacrifice to go ahead and make more efficient markets, that you can even access markets the way you can. We talk about fractional shares, all those things. What a beautiful thing. What a beautiful capitalistic society. Everybody listening to this in the United States gets to be a part of is just wonderful. It happens because we had men and women that gave their lives so that we have that type of freedom. So I think they're interlinked. I'm with you. It is not better than the other, but they're definitely interlinked. And I guess I'll leave it. The celebration of Memorial Day is important. Sometimes people get Memorial Day and Veterans Day confused. This is definitely that time to think about those who lost their lives, families that lost a loved one. And I'll just bring a quote from America the Beautiful. Oh, beautiful for heroes proved in liberating strife, who more than self their country love, and mercy more than life. So find someone to thank, a family that lost a loved one. Make sure you thank them for what their family sacrificed on behalf of their country. It's a beautiful thing. So Kevin, thanks for joining me on here. Should be back next week with Ian at Fully Rested, but thanks for doing this with me. I thought we covered a lot of good things for our listeners today. And if you love this, make sure you share it with your friends. All right. Thanks everybody. Have a great weekend.
Yep. Have a good holiday weekend and make sure you wear your sunscreen.
Love it.